Well, thank you for tuning in. You're watching The Property Guide in ET Now. Thank you so much for joining us. We have a wonderful show lined up for you today, but before I get into who my guests are and what we're going to be talking about, remember our email ID is at the bottom of your screen. You can reach me on Twitter and you'll find a copy of this show on our Facebook page, which means there are different ways in which you can reach us if you have questions on anything to do with either investing or buying property, or of course a loan or a legal problem you might be facing. As always, we have an exciting show for you. We'll discuss the RBI's rate cut and find out if at all it will benefit the property market and when that will be. We'll also talk about the Mumbai Port Trust Development Authority and its plan for Mumbai's eastern waterfront. And in addition, we'll answer all the questions you sent in on Bangalore and Chennai. In the studio today with me, Ramesh Nair, CEO and International Director at JLL India, and Arvind Nandan, Independent Analyst. Gentlemen, thank you so much for coming in. I want to first quickly give our viewers a quick wrap. We know the Reserve Bank of India on the 15th of January cut its policy rates by 0.25%. That came as a very pleasant surprise to a lot of borrowers and, of course, to the stock market. Now, softening inflation that really led to the RBI to bring down that first rate cut sort of gives us a hint that we might see further rate cuts in the time to come, at least for the rest of 2015. What does this mean for our up till now sluggish property market? Ramesh, I want to start with you. Obviously, it's going to take a couple of months before all the banks pass on that lending rate to both their corporate clients and to their retail clients. But how long is it going to be before that translates to sales in the property market?
See, the overall, today, if you look at the mortgage market, close to 6 lakh crores of lending which is being done. And we're talking about commercial real estate lending at around 1,65,000 crores. So we're talking of some really big numbers. So definitely there is going to be an impact. It's going to be positive. Industry is expecting a series of rate cuts. For every percentage increase, 100 basis points, your EMI typically goes up by around 7%. That's the thumb rule. We've been saying this for a while now. For the real estate residential market to pick up across the country, we're looking at improvement on the 3 I's: infrastructure, income and interest rates. Infrastructure, the government has announced quite a number of projects. On the income front, jobs have to be created, whether it's manufacturing or services. On the interest rate, this is definitely a good move. Previously, what we have seen is when banks start increasing their commercial loan books, RBI typically comes in, plays the spoil sport by increasing provisioning norms and risk weightage. I hope it doesn't happen this time. We believe over the next 15-20 days, public sector banks will announce a rate cut, followed by private banks. So this will be probably the first time in 3-4 years where we go back to the single-digit numbers. So today, from 10.15 to around 10.25, we may go back to those 9.85, 9.95 rates. So definitely a welcome move.
That's obviously the retail investor, but in terms of the builder who's been waiting for the cost of funds to come down so they can borrow faster and they can build faster, how much of a difference will this rate cut make to the builder?
See, for the builders to pick up their activity, we need to see 2-3 different things. Prices have to bottom out. Interest rates have to kind of come down, and buyers' confidence needs to come back. So at least one is happening now. Interest rates have come down. Prices in many markets, still developers are not dropping the prices. That has to kind of come down. Thirdly, we need to see the buyers' confidence come back, which is still not happening.
All right, Arvind, I will bring you in here, and we were talking about this a little before we started the show, where you said that a little bit of confidence because of low interest rates, and there might be some builders who decide to increase prices. What are the odds of that actually happening?
Yeah, that would be freakish actually if that happens. But like Ramesh rightly said, look, there are 2 sides to the same coin. For a builder to hold his own, he needs to have good financial capability, and he needs a good demand side in the market. Interest rate, by the way, is one element which actually stimulates both. So whilst on the one hand, it will enable the builders to get easy cash, better cash, at the same time, it might just stimulate demand. Now, therein lies the dichotomy. If the demand is stimulated, and if it is stimulated beyond a certain threshold level, which cannot be defined at this point in time, the chances are that in some cases, in those cases where the builders are a little more desperate, they may just think of an opportunity. So that is something which one has to guard against. I'm not saying it is probably going to be a phenomenon that will happen across the board, but that is something which can happen in a freakish manner. And that is something
So what is your advice right now to someone who's considering a purchase, and this is right now the only people who are really looking at buying are end users who've been eyeing a certain apartment or a certain project for a while. What do you recommend they do at this point? Go in and still drive a hard bargain because things will change soon?
Drive a hard bargain, no doubt. But, from a macro perspective, this 25 basis repo rate cut is practically only the start. Most analysts feel that we will have about 100 odd basis points repo rate cut through this 2015. So if you waited so long, probably just wait a little more longer. And you probably are going to be better off with a much viable proposition by the mid of this year. So
will I still be able to demand a sort of discount or a hard bargain from a builder by the end of this year?
You can, but I think these two issues are slightly separate from each other. You can drive a bargain, you can do a negotiation. For that, there are certain other things. The builder still has to feel a little bit desperate, and those things have to be in place. But your own enabling will happen on account of a better interest rate on your floating rates. And if that happens by the mid of this year, then probably you're going to be in a very ideal position to do a purchase.
So 100 basis points by the end of the year means EMIs will come down 7% then as well. All right. We also want to talk about Mumbai. Now, for those of you who didn't know, the Rani Jadhav Committee, which was set up by the central government in July last year, recently submitted its report to the shipping ministry on ways to develop the eastern waterfront in Mumbai. Now, there are 7 square kilometers of land which will come up for redevelopment. They're currently been occupied by crumbling warehouses, disused ships, and a lot of encroachment, really. Now, if everything goes as planned, this entire space will become available to the city for development, whether that's, in transportation, whether it's going to be a tourist hotspot, or even for residential development. There's a lot of debate right now on what that space should be used for. And there have been we know there have been recommendations in the report, although we don't know exactly what's in that report at this point. Ideally, what would you like to see come up on that in that stretch of land?
See, it's definitely a big opportunity which the government has today. For the first time, we are hearing about the PMO, the shipping ministry, and the local chief minister working together to kind of fast track this. This is a great opportunity to create a magnificent waterfront. You could create marinas, you could create floating hotels, floating restaurants. There could be a large aquarium. We could create a London wheel kind of a thing. So there are many opportunities here. I think the biggest opportunity is out of the 1,800 acres which the Port Trust has, around 1,000 acres is developable. The current plan which they are talking of is around 25% in roads, 40% in mixed development, around 30-odd% for other aspects, including amenities. One could look at creating an alternate CBD here. If you look at BKC today, we are talking of around 380 hectares, close to 900 acres. So we're talking of similar size land. BKC today has more or less become saturated, not much of land available to be developed. Prices have gone up the roof. This could be a great opportunity to create an alternate CBD. To BKC, where rentals are still reasonable. The city could get a lot more commercial demand, lot more companies coming up here. For that, the government has to give land on long lease, which is a controversial topic. So government needs to fix that.
But that's not the only controversy. We are expecting other roadblocks in that entire redevelopment process right now.
3-4 roadblocks. First roadblock is projects like this may not even take off. There are a lot of such projects which starts with a lot of fanfare, but then kind of hits a roadblock and stops. Second is bringing all these authorities, whether it's the state government, the shipping ministry, the BMC, MMRD, bringing all of them together to take quick calls.
Reach a consensus.
Yeah, to reach a consensus. Mill land. Again, mill land, if you look at what the development was, 1/3 was supposed to be green areas, 1/3 was supposed to be affordable housing, and 1/3 was development. Finally, we all saw what happened. So is it going to reach that kind of a thing? And if not planned, it could lead to a very unplanned development in such prime land. So I think a lot of thought has to go in. It's great that it's been fast-tracked, but I think the government needs to think on all possible eventualities and then take decisions.
All right, a huge opportunity, but an opportunity provided it's used well. And Arvind, the interesting part about it is if we look at that entire eastern waterfront, right up to Chembur, where RCF is now considering redevelopment as well. If we go even further, there's BPCL, there's HPL, there's HPCL. Between the two of them, they own about 800 acres of land, if I'm not mistaken. There's a lot of land that can be freed up for residential development. This is now the heart of the city. It wasn't when RCF was put there, but it is now the heart of the city. How important is it perhaps for the government to start looking at all of this, whether it's the state government or the central government, and say, okay, Mumbai needs to be decongested. This could possibly be a way to do it.
This has always been the thought. And if I extend it a little further, what has been the Achilles heel for Mumbai could actually become the sweet spot. This practically has been an Achilles heel for Mumbai. But there are three others. Let's look at the whole thing in totality. So there is the Portress land, there are the mill lands, which Ramesh spoke of, there are the salt pan lands, and if you go slightly outside, there is the Naina land, which again is in the news right now for different reasons. If these four are treated as either lung spaces or new areas for CBDs, new areas for tourist destinations, new areas for residential, like you said, if you look at everything in totality, then you have a massive proposition for Mumbai, and this high density urban agglomeration could very well be decongested, like you said, but not by taking a piecemeal approach, picking up one thing at a time and getting stuck with it for 10 years. That doesn't solve any problems.
Of course, if we do look at it responsibly, these are also, this is the land that the flamingos fly into once a year. You want to be able to, we want the assurance that it will be treated with respect and with responsibility. But Ramesh, tell us this, if even a portion of this land half this land was unlocked for residential development, what would happen to the prices in the rest of the city, for argument's sake?
Today, the going rates in Sivri ranges from a pre-launch of around 20-22,000 going up to 30-35,000. So there is huge opportunity. Land prices today for a small pieces of land would be anywhere in the 90 crores to 110 crores. So 1,000 acres, we are talking of 70 to 90,000 crores of value of land. So a lot of planning has to go on. One good point Arvind made is the city needs open spaces. London has 30 square meters per person. Delhi has 15 square meters per person of open space. Our city has 1.1 square meter per person. So city badly needs open areas, and all the more reason the government should plan it keeping that in mind.
All right. And of course, if we are going to have open spaces, then, responsibly managed open spaces that are accessible to the entire population in the city. Welcome back. You're watching the Property Guide in ET now. Thank you for staying with us. It's time for us to answer the questions you sent in during the week. Well, Krishna Prasad has written in. He tells us he'd like to invest in a plot of land in North Bangalore with a time horizon of 5 years. He wants to know how he can identify this plot of land for investment. Arvind?
Yeah, this is a slightly atypical question. Many questions come on a plot investment, but this is an investor who is looking to reap a harvest in 5 years' time, or maybe even longer. I would rather lead a person or an investor like this to a location which is just coming off the ground. So from that perspective, I would actually indicate two quadrants in Bangalore. One is the Devanhalli side area behind NH207. Okay. That is one area where today the pricing is pretty low. In fact, for good plots of land, you can pay 3,500 rupees a square foot and have a decent plot of land. There is Urbana of Ozone, which is already there. Shobha is also there, by the way. So this is one good area from a future prospect. The other quadrant could be on the eastern side, the Narsapur or the Malur areas, where you have land even cheaper and very much on the drawing board stage right now. So 500, 600 rupees a square foot is what you pay today. And then there are investor schemes in which you can participate. So from a futuristic investor's point of view, I would say look at these. Otherwise, there are various other locations in Bangalore. But I would say for this particular investor, these two areas will be good.
I have one question about Devnali, either of you, whoever wants to take it. The fact that Infosys packed its bags and moved out of Devnali, say electricity not happening fast enough, roads not happening fast enough, water has not reached Devnali yet. So for someone who has a 5-year horizon, that's a bit of a risk because there's no guarantee that things will change in Devnali or in the general administration of Bangalore in the next 5 years. So would you like him, I mean personally for me, if he was looking at land particularly in Devnali, should he have a 10-year horizon at least?
Absolutely. I think anyone looking for plots across the country should have 2-3 thumb rules. One is look at a 10-year period. Second is look at a gated community of plots which will take care of aspects like title, encroachments, all that. In this vicinity, I think one should look at somewhere 4-5 kilometers from the airport. closer to the city, that radius. The Hebel to Bagalur junction also one can look at. So prices ranging between 2,000 to 5,000 rupees per square foot today he could get plots.
All right, so there's definitely an investment opportunity there, but a 5-year horizon might be a slightly tough one. You might want to keep an open mind about your time horizon. Let's take another question about Bangalore. Parmeshwar Appa has written in. Now, he bought a 2-bedroom home of 1,060 square feet. He said a flat of for which he paid 38 lakh rupees. He wants to know what the expected rental income is in that location, what capital appreciation he can expect over the next 10 years. 10 years, okay, so that's a better time horizon. What can he expect?
10 years is definitely tough to predict, but next 3-4 years he can definitely expect a 8 to 10% increase per annum. Rentals in that corridor for a 2-bedroom, 13 to 15,000 rupees. It's a good spot, connects Sarjapur and Whitefield. So a lot of IT jobs around it, so easier to rent out.
All right, let's take another question. Nisha has written in. She wants to buy a 2-bedroom flat in Vadodara in Gujarat, a budget of 40 lakh rupees. Please give me some good projects. Arvind, could you help her out?
Yeah, Baroda is something that we've always spoken of. It's a place where you can very well invest in a sub 40 lakh 2 BHK and expect for the value to grow. 2 primary locations. One I would say is the Gothri Road area, which is towards the western side of Vadodara. There are builders like ISKCON Harmony is there, there is ISKCON Habitat, there's Pratham, there's several others. You will find a good apartment. Each of these is big, about 100 odd units. So on the Gothri Road side, you have some prospects. At the same time, you could look at Vasna Bhaili Road, which is a little south of Gothri Road. Again, an upcoming location. There is Empyrean Skyline, there is Acropolis, and there are several others. One can go on naming them. These 2 quadrants. If, however, you are somebody who is very futuristic in your investment, I would rather suggest you go towards the eastern side or the erstwhile industrial corridors and look at investing there. Ajwa Road, Wagodia, Dabhoi, these are the areas where you could go and invest. But if you are not somebody who's a very long-term investor, go to Gothri Road or Vasna Bhaili Road, as they are my picks.
All right. Nisha hasn't given us any indication that she's a risk-taking investor. Women investors rarely are. She does seem like someone who wants to quickly buy a flat. So we hope that helps. And if you have any more questions, you can, of course, write back to us. Welcome back. You're watching Property Guide in ET now. Thank you so much for staying with us. Pramod Nair has written in. He wants to buy a 2-bedroom house in Chennai with a budget of 35 lakh rupees. Please give me the best location. So I like these open-ended questions because then we can have a conversation about it. So in Chennai right now, the budget's a little tight, even for Chennai. What would you recommend in terms of a good location that has good social infrastructure that someone can invest in at this point?
A few years back, the government made a rule which said that any development which is more than 2.5 acres, there was a compulsory EWS section, which was 450 square foot apartments. So at 25-30 lakhs today, there are a number of 1-bedroom apartments available where 450 square foot. That's one he can look at. If he can stretch by another 5-7 lakhs, he could look at areas like Kelambakam, Oragadam, Sriperumbudur. So my bet would be that quadrant between south and west, that's what he should look at, where there is a lot more jobs being created. There's a manufacturing corridor, the IT corridor, and he should look at between these 2 roads, between the old Mabalipuram road and the Bangalore highway.
All right. Arvind, do you want to add anything? I know that, so we have answered the question for someone with a budget of 35. Let's increase it for people who are watching. Let's say we have a budget of 50 to 60 lakh rupees for Chennai right now. A slightly wider range than in that case. What would you recommend in terms of
Then my first choice, if you are looking at 50, 60 or slightly above, my first choice is going to be Pallavaram Thoraipakam Road. That is something which we spoke about earlier as well.
Yes.
When I said Chennai looks like an inverted funnel to me, with OMR on the eastern side, the GST road on the western side, and the 2 connecting roads, east-west roads. Now that quadrilateral is very important to me. And therefore, Pallavaram Thoraipakam Road, which is probably the first most important corridor there, is ideal. So if you are in that bracket, 50, 60, 65, 70 maybe, then be there, because that is something which is going to be very prominent in time to come.
All right, so there you have it. Those are recommendations on Chennai. Let's look at Pune right now. Raut has written in. He tells us he can buy a resale property in Pune. Now, 1-bedroom. There's a property in Hinjawadi up for 39 lakh rupees, in Poonawale for 35 lakh rupees, and in Rawat for 38 lakh rupees. He wants to know which is the best option right now. He's buying this purely as an investor. Ramesh, Hinjawadi seems like it has the most promise, doesn't it?
I would recommend Hinjawadi. 2-3 reasons. Lot more IT jobs being created thanks to presence of the IT park. Lot more manufacturing jobs being created because of the entire industrial belt being close to Hinjawadi. We see good capital appreciation potential, and because the base rates are reasonable, and because of the IT and manufacturing jobs, being an investor, it's easier for him to find tenants. I would recommend an under construction project, which would take at least 1.5 to 2 years to get completed, where he can see a better capital appreciation.
So instead of what you're saying is, instead of buying resale from the resale market right now, look at something that's under construction.
Exactly, and I would recommend if he could stretch it by another 5-10 lakh so that he could get a good quality developer in Hinjawadi.
Last question on the show. Rohit Shah has written in. He wants to buy a 3-bedroom home in sector 75 or 79 in Noida with a budget of between 75 to 80 lakh rupees. Looking for possession next year. Please give me some good projects. Anything he can buy in Noida in that bracket?
Yes, he can get enough projects in that budget, 3 bedrooms, thanks to a lot of oversupply in that market. 34 months of unsold inventory. We've seen that market since 2009, prices have actually gone up only around 30-32% since 2009. Some of the developers, Gorsons is something you can look at, Apex, Buildcon. Lotus Greens has some projects, not in that vicinity, but around it. So these are some of the developments you could look at.
All right, and if you have any more questions about investing in land or in property, or about controversies that either the area or the builder might be in, feel free to write to us. Our email ID is at the bottom of your screen. Gentlemen, thank you so much for spending time with us this week and answering our questions. Thank you so much for watching. Remember, you can reach out if you want to. It'll be our pleasure to hear from you. Have a nice day.